Now that we understand support and resistance, we understand how to find our areas of interest, we understand what price action is. Okay, now we're going to try to bring this thing together, right? So from top to bottom, like I said, I mark up the daily and the H4 as far as my areas of interest. So what I start with is the daily, right? So obviously I got a chart on purpose to make it look very choppy. It's hard to tell which direction we're going. So to clear that up, like I said, I use Hikinachi candlesticks. Now we need to find the most recent or the most important level, right? The most recent level that price has reacted to. And it looks like it's in this area. As you can see, I got 1, 2, 3, 4, 5, 6, just crazy amount of touches, correct? And on the daily, we are up underneath this zone, right? We're also, if we notice, we're in a daily downtrend, right? So here we've created a new low right here. So here's our higher low point, right? And we can identify that from the Hikinachi candlesticks as well, correct? So where does price want to go to? We need to find one more area that price wants to go to. Looks like it's right in here. So if we can see over here, price has reacted over here. We got 1, 2, 3, 4, 5 touches over here. So I think price wants to get down to this area. So now that we've identified our house, right, we can look at this as levels, right? We just created one big box. This is our house, but we want a multiple story house. So how we create multiple levels within inside of this house or this range, this daily range, we got to go to the H4 and draw those support and resistance levels too, or areas of interest. So we can see that here looks like a level, and I like to change my color of boxes so I can identify what area of interest that is. The blue is the daily, the green is the H4, but you can see we have 1, 2, 3, 4, 5, 6. We got multiple touches, correct? Now I need to go find, once price had this reaction, obviously it's already rejected, but once price had this pullback and it rejected, where does price want to go to? Right? Where's its first stop at? Right? So we need to go find the next H4 area of interest. I have 2 touches here, but sometimes you have to scroll to the left in order to get a better understanding of why the market is reacting the way it's reacting. So let's see if this works. I cannot see over there. This looks like a good level. Obviously, we've had multiple clean touches and rejections through here. So let's scroll back to the right. And as you can see, that's why the market has reacted the way it's reacted. So this is how I get my areas of interest, okay? So we're underneath on the daily, and we're also in a downtrend on the H4. I want to change that. I changed this one to yellow because this is my H4, higher low. Where's my box? There it is. Okay, so I can tell the difference between my daily and H4's higher lows, or higher highs, lower lows, whatever the case may be. Okay, so now we can go back to our regular candlesticks, and that's essentially what we are looking for on marking up our levels. Now, for me to take a trade, okay, once price breaks through, I have to have a pullback and sell from the H4 area of interest, right? But regular candlesticks can confuse you a lot because there's a lot of green and red candles. What the Hikinachi candlesticks do is give you an average movement of price. So when I first started learning how to trade, I would have identified this as a pullback. I also would have identified this right here as a support level. and I would have sold this. I probably would have made some money, but a lot of times price doesn't do that. It doesn't react that way. So what I've come up with and learned, if I use my Hikanachi candlesticks, I see that that wasn't a true pullback. Okay, so in order to have a true pullback, you notice we have red candle, red candle, red candle. One of these would have had to close green. Then I could have identified that as an actual pullback. But because I don't have a green candlestick with inside of this, it's not a pullback. The pullback doesn't start until we get this green candle. So now we're green, 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 and we got a pullback all the way to our H4 area of interest. So now that we've identified we got a real pullback, now I'm looking for my entry. My entry is very simple. It is an H4 rejection candlestick, which is the red one, rejection candlestick. Personally, I don't care how the candlestick looks. Some people need engulfings or dojis. I just like a rejection candlestick. And where I personally want to get in at is at the open of that rejection candlestick. So I will put a sell limit right here at this area, or within 10 pips of this range. Or I'm sorry, not the range. 10 pips, within 10 pips of the open of that candlestick. So these two black lines represents 10 pips of a selling zone. So this is my selling zone here, as we can see this. Okay, so price, the open of that candlestick is 940. It doesn't have to be exact. If you want exact, we can put our little dial over the candlestick. In the top left corner, you can see that the open of that candlestick was actually 940. So we are right on the money. And then obviously we put our next line at 840. That's within 10 pips of the market, or of the open of that candlestick. As you can see, we were within 10 pips. So we sold. And once I go over here, this is currently where we're at. We are aiming for at least a 2-to-1. As you can see, we haven't made it to that area yet. So we're waiting on price to potentially fall. So you have two targets. You have a 2-to-1, or if the daily range isn't too big, you can ride the daily range all the way, or the range from daily zone to daily zone. And that is your exit. How I identify where I put my stop loss is, there's no really set rules other than I don't like to have more than 50 pips. And pairs can be different, meaning I have a 30 pip stop loss on NZD CAD, whereas if we were on NZD JPY, these are 40 pip stop losses, but they look a lot tighter. So it's all based on how the pair moves. And that's why I just need to give myself breathing room. Does it look like enough breathing room for me? That's what I'm looking for. So that's how I base my stop loss, no more than 50 pips. This one was 30, so we're aiming for a 2-to-1 on this one. And then that is my strategy. I just gave y'all everything. The rest of it, very simple. My EMAs are based off Q Banks' EMAs because I bought his course at one point. The EMAs are just an extra confluence. They do not determine whether or not I get in a trade. What determines whether or not I get in a trade is whether we're underneath our areas of interest or above our areas of interest if we're for buys, underneath for sales, and if we get a rejection candlestick. And the rejection candlestick tells me that price wants to slow down. It's that simple. But a lot of times you can see where we get wicks. So let's go look at some more real quick. We had some areas, some trades I took. As you can see, one second, let me get this all. Okay, as you can see, at one point, an area of interest was right here on the H4. And you can clearly see where our daily zone is, right? And essentially, we are in a daily uptrend. So this was a counter trend trade move, right? So trading with the trend for me is on the daily. So anything opposite of the daily, of course, is a counter trend trade for my setup. And like I explained to people before, you're always counter trend trading technically, because I can be in an uptrend on the daily, the 4 hour can be in an uptrend, but the 1 hour can be in a downtrend, right? So you're technically always counter trend trading. You just have to identify what counter trend trading would be for your strategy. So people get confused on that. Oh, you're stupid for counter trend trading. Well, technically you always are at some point. But as you can see, once we got to this level, we had a shift of structure on the H4. Once we got the shift of structure, we can clear that up, right? If we're confused, we can clear that up. Do higher high over here, break of structure. We had a retest. How we're able to identify whether or not that was a legit retest is we have red candle, green candle. That tells me that that is a legitimate pullback. So when I go to the regular candlesticks, now all I'm waiting on is a rejection candlestick, which we got right here. Because the rejection candlestick was so tight, we was able to immediately place a sell, and you can see we was in very minimum drawdown. Okay, so same thing for a buy. We had price, downtrend, we got our sell, we got out, right? Counter trend trade, we're not trying to hold it too long, but like I told y'all before, we could have held all the way to the daily. We didn't. We got our buy, right? We had our pullback. We can identify our pullback now that we have red candlesticks, right? And as soon as we get our pullback, and our pullback comes all the way back to our H4 area of interest, we're waiting on a rejection candlestick, which we got right here. So we have a buy limit, or we can buy within 10 pips of the open of our rejection candlestick. Okay, so we bought. Y'all can see there's very minimum drawdown. There goes price, right? And it doesn't always work this way. Let me show you an example. It's not perfect strategy. Nothing's perfect, but let me show you where we actually had a situation where price, we're in an uptrend. Price was reacting. We finally had broke above. We hadn't touched our daily zone yet, so it was still game to take buys. If I come up here and the daily zone is touched and we stay underneath and we react from that, I am now either looking for price to have a price action change, structure shift to the downside, then look for sales, or price has to close above that area. And as you can see, and actually this was more so up here like this at that time. What happened was price retested our area of interest after we got our pullback, because we got our pullback based off that's a legitimate pullback. We had a green candlestick, a rejection candlesticks, which tells me price wants to go up. We bought within 10 pips of our buy limit, or within 10 pips of the open of that rejection candlestick. Liquidity grab, price goes in our direction, right? But overall, it's not that our strategy doesn't work. It's not that we were wrong. It was just wrong timing, right? Or if I could have used a bigger pip or a bigger stop loss, if I'd have used a bigger stop loss, right, it would have been a good trade. But I personally seen or thought that 30 pips was enough breathing room for this trade based off how price was moving. But it wasn't, but it's still a strategy that works. I'll do one more. We got it to the daily. Once we get to our daily zone, we are now waiting on price to have a shift of structure. We have a shift of structure. We need price to retest our zone, which is the H4 is what we're looking for. Our H4 zone, it retests the H4 and the daily. Now we're waiting on a rejection candlestick. We got a rejection. Price sold. Easily 2-to-1, maybe a 1-to-3 on that. That is my strategy to a T. Hopefully this helps. And if I identify a lot of people asking the same questions, I will make another video to whatever those questions may be.